The law of gravity always affects the markets. The law of gravity says what goes up must come down. And it happens in all markets, meaning that if you're having a potential or you're seeing a steady bullish market, understand the fact that at some point, the market will capitulate. And that's what has been happening in the markets in the last 2 weeks. Look at what happened in last week. The markets, it was a bloodbath, but it looks like the market recovered on Friday. What a great way to recover. And you know how we do it here. We have these conversations around the market on Market Watch, brought to you by Nairametrics Television. My name is Frank. We've got a lot of stories to talk about. We're talking about the market recovery, and then Ellah Lakes and the markets again. Not only Ellah Lakes, we also have FCMB Group. They're also in the market trying to raise 340 billion naira to 370 billion naira. All these conversations we're going to have on this episode of Market Watch. Well, let's go right into our amazing analysts. The first person we have here is Mukhtar Mohammed. You're very much welcome again.
Thank you, Frank.
What a great way to start the week. Market recovering, everything on the green.
Hopefully.
Idika, what's your take about the markets? How did you feel last week about what happened in the market? Were you proud of the recovery that we experienced?
Sure. Well, first, thank you very much, Frank.
Yeah.
I said it, and I'm advising. I always calm when you have that problem. People were panicking. I said, no, don't panic. There is an issue of panic sell-off. So, but I knew there was going to be that recovery, and yes, we had that, and I think the key thing is to see what happens this week, see the sustenance. I think there are key things we have to watch out to actually know that, okay, the market has come back.
From 599 million shares traded on a daily to 4.8 billion. It means like investors' confidence is back, fully back. And given this performance, what should investors look for this week? Mukhtar, what do you think?
Well, just to continue from where Ndika started from, I always say there's two sides to the coin, two sides to a story. Number one, depend on the side that you were at when the market was behaving the way it was behaving. And two things you need to guide against when you're in the market: fear and greed. And I think what took the market last week was all about the fear, the fear of the capital gain tax. And then we saw that recovery because of pronouncements about the capital gain tax that we've always said about.
The suspension.
They didn't say they suspended it.
They said they will look into
it. So let's be careful what we think about it. For me, I think, like Ndeka always said, deep in the market is an opportunity. But again, it depends on where you are. And if you have that key we talked about, patient, to know that there will definitely be a recovery. Yeah, confidence came back to the market after that pronouncement by the minister that they've heard the stockbroker. I think that was the word he heard. He said, and then the following day, I think Taiwo Day was on a program. Fortunately, there was a program with me where he clarified some issues as regard the capital gain tax.
Yeah.
Which was not clarified before now. Before they say it's going to be a retrospective tax. That means if you have held that stock for 10 years, you are going to still pay the capital gain tax anytime you are going to sell. But he has come out to clear it. And he said institutional investors will not be affected. Now, who are institutional investors? Is it local institutional investor or foreign institutional investor? We need clarity on that.
Yeah.
And pension fund administrators will not be affected. And that's good. That's also good news for the market. Retail investors that do not go above 150 million will not be affected. That also is good news for the market. And the market respond to news. And I think the market responded to that news positively. And you saw those recovery, which means that a lot of people were actually selling out of fear.
Yeah.
That fear gripped the market. And then for those that were able to ride on the fear of other people, they were able to make a very good deal at the end of the day, because before that incident happened, UBA went as low as 34 naira 60 kobo. Then after the incident, we saw UBA going back to 42 naira, closing at 42 naira. So you can imagine those that have went into the deep, like Ndika would say.
Yeah.
They've gone into the deep and now they are benefiting from it. So confidence in the market because of those volume that you have just talked about. Clarity also is good. One advice for government is that when it comes to taxation, clarity is always key. When it comes to taxation, because taxation is one thing every business are very careful about, because it can put you in business, can take you out of business. And again, tax evasion is what business people don't want to be associated with. They like associated with tax avoidance, which is legal. So we need to be careful about it. But I think this week, we will see same of same. We will see profit taking. We will see market recovery, depending on what price it was before the dip and what price it is now. Another thing we didn't know, we should let people know, Indica also can testify to that. Okay, yeah, if you follow the market trend at period like this between October to November, towards the first week of December, you always have this bearish trend, because again, we are seeing a lot of portfolio recovery, reshuffling towards the third quarter result that investors will be digesting. Then by December, they begin to take position either for dividend or for capital appreciation.
Very true.
So, but in this case, you saw those drop in number. Capital gain tax was part of it. Secondly, the pronouncement of Trump was also part of what drove that fear. And then I think for me, the pronouncement of Trump, fine, but the response from the government also did not help matters, because it was more or less like confrontational for fire. I think that did not help investors' confidence.
Recovery is one thing for us to experience recovery, but how sustainable do you think it is? Idika, what do you think? What are the signs to show that this is sustainable and this is something that is going to stand the test of time?
Yeah, thank you very much, Frank. I think let's, like I said earlier, let's look at what happens this week. If we can sustain the what we achieved last week, what we follow through the buying mode we had last week, that is another sign to show that actually, yes, this is sustainable. Then again, investors should watch the big cap companies, especially the NGX 30, where we have the big, the heavyweights. So if they remain stable, either you use the NGX 30 or use the SWOT, that is stock worth over 1 trillion naira. Yeah. So if they maintain that stability from that angle, fine.
I agree, because
because we are likely, if they maintain it, if they are stable this week, that shows that yes, you can sustain the rebounds. And of course, last week the major driver came from sectors from insurance and banking. So if the market breadth can enlarge a bit outside these two sectors, it's equally a sign to show that okay, you can sustain it. So these are the things investors should watch out for this week. Insurance
and banking. I think one very important thing about the NGX is the fact that there's a close affinity to the banking sector when it comes to volume, when it comes to market performance in general. If anything happens to the banking stocks, that something is happening to the NGX. Anyways, let's move on to the new guys in the market. We're seeing them in the market this time around. Ellah Lakes. I'd love us to just have a brief conversation about them. Major players in the agri sector. Should I use the word major? Yes, I can categorize them as major players in the agri sector. They are in the market. 18.8 billion ordinary shares at 12.5 billion naira each, and that's what they are offering, targeting a total raise of 235 billion. And what you're saying is all of this is just to accelerate its growth in the agri-business sector. Agriculture is very, very important in any economy in the world, and Nigeria cannot be excluded. What's your take about Ellah Lakes in the market? They're trying to raise 235 billion.
Well, for me, you just said it's agriculture. People will always eat, whether it's war-torn or whatever. So people will always eat. Very and true. So, but you have to look at what they are actually raising the capital for, just to make sure they're able to acquire a bigger agricultural company.
Yeah, what's the name of the company again? I'm trying to remember.
I can't even remember the name of the company, but it's an agro processing company.
Yeah.
So, and that also will really help them be able to go into full agriculture. That will also improve their bottom line in terms of profitability. I think that's what they are looking at. And so there's still a lot of potential because the agricultural sector, and knowing fully well that the two very good agricultural stocks are way beyond retail investors' preview these days because of the price.
Presco and
Okomo. So, like we always say, that's what you do in terms of comparing analysis. Then you begin to look at potentials in Ellah Lake. And if you look at Ellah Lake numbers from where they were 52-week low and 52-week high, you realize that they've done so much for those investors that were able to stick their neck for them. So basically, that's what I think about that stuff.
52 weeks low, you just spoke about that. It was 2 naira. It's around 2 naira, it's something kobo. And then 52 weeks high rose to 19 naira. That's some people will say that's a stellar performance. Do you think, Idika, you're the man of the numbers, dilution and value per share. What's your take about that? Do you think existing shareholders in terms of dilution and value per share? Let's talk about that a little bit.
Yeah, I think Motor has done very well. The reason why they even want to go into the market in the first place.
Acquisition.
Acquisition. I think the agro-allied resources and the processing. Of course, what they are bringing, if you look at the template, what they are bringing on board, that is very, very important because I think the essence of the whole thing is to increase their top line performance in terms of revenue, to boost their revenue from what it is right now. Maybe because if they boost their revenue, that will equally affect their bottom line. But let's go back to their market performance, which you said from 52-week low of 2 naira to 52-week high of 19 naira. I mean, that is very, very impressive, and still trading at a little above 12 naira, and they are offering I think 12 naira 50 kobo. And that shows that it still has that upside potential. 12 naira and 19 naira 52-week high. And even 52-week low of 2 naira. But I think the where the challenge is, it would be is to be able to maintain the earning per share, which is very, very important. Apart from the normal accounting profit, net profits, at least with the dilution expected from the PO they are issuing now, because right now they have about 3.86 billion outstanding shares, and you are issuing 18.8. That will give you over 22 billion outstanding shares. So how much will you be able to make to be able to sustain that decent earning per share? You know, earning per share is gotten by dividing the net profit by the shares outstanding. So that will not give you the earning per share. So now you can see the growth coming from the shares outstanding. Then that means the company has to equally grow their profits at that level too, to be able to sustain that shareholder value. And I think if you look at what the acquisition is going to bring on board, that should be the focus.
Very true.
What should be the focus? What is the acquisition bringing on board? Because the essence of the whole thing is to increase their top line performance. So if it can boost their top line performance, I think I've gone through their financials, not to the operating costs, the overheads, not too aggressive. But the major problem is that the top line. So if they can boost that top line, I think they will be able to.
I love the fact that you came from all this from this angle, because personally, I'm really just going to say, I'm not going to mention the name of the company, that there's a company in the banking stocks that is known for acquisition across Africa and all that. They are so massive, but it's not reflecting in their numbers. And I'm like, should acquisition be the only reason why I should have my faith, and should that be my investor sentiment, and should that be my buying decision in a particular share? Anyways, let's just leave that for another day.
Acquisition.
Because you can acquire and it doesn't reflect in the numbers.
Bottom line doesn't always show immediately.
Oh,
that's the truth.
Yes. Okay. It doesn't.
It doesn't really show, but you see a tip of the potentiality in the acquisition.
So, can you give us a duration?
No.
3 to 5
normally,
years?
it's between 3 to 5 years. And if you look at that, a particular bank, if that's the bank you're talking about,
yes.
If you look at
the first letter of the
acquisition, what it has really helped them in terms of profitability. And those acquisitions have not started drawing in so much money into their bottom line. But there's that potential to do it. And when you are staying in an environment that is over-regulated, you also are looking at expanding to other environments whereby you can be able to manage your risks. So for me, I think acquisition is key. If I want to buy, like what they are doing, from where they are coming from where they are going, they need a big thing that will excite investors, because investors will now begin to price in the acquisition. It doesn't matter whether they come in 1 year, 2 years, 3 years, 5 times, but most investors will price in the acquisition.
50 kobo. Do you think it's a good offer?
I think to add to what Mutak said, in acquisition, it's very, very important, because that's the only way you can expand. But the key thing there, what you have to find out, especially for investors, if you are acquiring something, you have to look at what we call the weighted average cost of capital.
Take it again.
The weighted average cost of WACC, the weighted average cost of capital. So if you are acquiring a company, it comes with a cost too.
Yeah, true.
And if the cost overall will reduce the company that is acquiring the overall cost of capital, that is very, very good. That will reduce your overall cost of capital. So in the case of Ellah Lakes, I think if the acquisition is going to reduce their WACC, that is wonderful. That is okay. And at the same time, and I think I've gone through it briefly, the most important thing, what is the goodwill the acquisition is bringing to the company? In acquisition, what we call the synergy, 1 + 1 should be more than 2.
2, yeah, true.
You understand? 1 by 1 should give us 11. You should give us more than 2. It's not the normal 1 + 1, 2 in acquisition. So I think the key thing there is that the acquisition, what is going to be the overall cost of capital for Ellah Lakes, and what is that bringing to Ellah Lakes. And I said I think the major problem there, looking at their financial, is the top line. So if they can grow the top line, and if the acquisition can increase their top line, fine. They are good to go.
One of the major drivers of an average Nigerian investor, especially in our capital markets, is dividend. Once they hear the word dividend, it's a game changer for their decision. They're promising investors 2026, they're going to begin dividend payout payments. And they're saying that this is part of their growth story. Do you think this this will reflect? Well,
before I know Mukta is edging. Before he starts, let me just make 1 point there.
Yeah, please.
Payment of dividend
2026.
2026 is based on performance. Yeah. Especially how heavy is your balance sheet. You understand? Because you cannot pay dividend if you have negative retained earnings. So you must have positive retained earnings that can support that dividend. I think their permutation or the calculation is that, by the time we get to next year from this acquisition, we'll be able to clean our books, make more money, clean the books. If we have retained losses, we're able to clean it. And it's only from there that you can pay dividend. But like I said, the target should be that your earning per share should grow faster than your shares outstanding.
Yeah, true.
Because we say that shares outstanding has gone from, I think, about 3.2 billion.
Yeah.
By the time they finish now, to about 22 billion, which is massive. So the ability to grow that profit at a faster rate than the rates the outstanding is going to grow will actually determine whether they are going to pay that dividend or not.
Do you think dividend will have a massive impact?
Dividend always have a massive impact, so I don't think this will be an exception. So I think dividend, if they are able to keep to their work to 26, that would be very nice.
FCMB is in the market again, and FCMB is moving to raise its capital ceiling from 340 billion to 370 billion. That's 30 billion more. what do you think? The upcoming EGM is on the 8th of December 2025. And all of this is just to meet CBN's new capital requirement. So what does this capital ceiling increase mean for investors and the bank in general?
Yeah, I think from 340 to 370, FCMB has been in the market to raise money. And as at I don't think they have released their 9 months 2025 results. But as at June half year, I think they have a share premium and share capital account of about 266 billion. They have to move it up to 500 billion.
Oh, yes.
They have to move it up to Very 500 true. Billion. And now they went into the market and they are looking at 340 and they have moved up to 370 ceiling. That means probably the offer is oversubscribed. So they just want to get the clearance, okay, fine, we can accept any oversubscription from this. So with that 270 billion, sure, they are likely to meet up with the new capital requirement. That will even push their share capital and share premium accounts to over 600 billion, which is fine, which is okay.
There is 144 billion in 2020. Public offer.
Yeah, they have been. I said they have been.
And then 23 also convertible.
Yeah, they have been in the market. But we look at their financials as at half year. The share capital and share premium, which is what CBN is using to measure to get to say, okay, fine, you have met the requirement. They have about 266 billion. So that will now give you about, let's say, give about 230 something billion to make up that 500 billion. And they are now raising 340, 370 billion.
Yeah.
So by the time they conclude, definitely they will get up to 600 billion, which is important, which is very, very key.
So what do you think about dilution on their earning per share?
Well, dilution is always key when you come to investors. And I am an investor, so I'm looking at what is going to come to me. Earning per share comes into play. And if you have too much dilution, then the first place it normally hit is the earning per share. So, and that means that investors will have to pay more, and also because of the earning per share that is high.
Yeah.
But like Indika said, sometimes there's maybe when they are giving the fact behind the figures, they could also use more earning per share going forward. How many percentage the earning per share will end going forward?
Yeah.
But I think they are way ahead to see how they are making. They will make that fund and then improve upon their earning per share, especially via their capitalization.
Yeah, I agree with him. Even if we equally look at sterling, it's all the same thing. Like the most important is the value to shareholders, and shareholders are not bothered by how much we are raising or the profit we are making, or how much is coming to me, and that one is measured through earning per share. So how much is actually coming to me, and at times if you keep on increasing your standing shares, definitely it will move your earning per share, unless maybe your profit is equally growing and maybe at a faster rate than your shares are standing. And that is always the problem. That is the challenge. So as they are going into the market, the shares are standing definitely will increase, but they have to equally work very hard to ensure that earning per share equally move higher than the shares are standing growth. That is very, otherwise the value to shareholders might be mooted.
An average shareholder is literally selfish. I love to put it that way, because it's not your business what happens in your bottom line, what happens in whether you're making money or not. What really concerns them is how their portfolio is performing. And that comes from earnings per share. What is the value you're giving an average investor? And that's what Edika has said. So that gives you an insight as to how to approach the market. Look at these numbers. When you look at these numbers, watch Market Watch, get insight from Market Watch, and use it to get an informed decision on how to approach the market. That's what we do on Market Watch, brought to you by Nairametrics Television. My name is Frank, and we do this every Mondays and Wednesdays. So, on a final note, what do you have to say to your investors? Weekly, let me hear.
Yeah, I've said it. Watch the market. Let's see if we can sustain the positive we had last week.
What the market? Let's see if we can sustain the positive we had last week. How about you?
Well, I would say investors, lot of opportunity in the market this week. Take advantage from those opportunity. Read more of the analysis by Indica in Nairametrics, and also still follow the money with our gold trade. And don't forget to rewatch Market Watch over and over again, especially for those key numbers that the guru himself, Indica, always give.
My bosses have said it, so I dropped the mic. I'll see you next time. Cheers.